Hi guys, welcome back to the channel Cracking Wealth. Thank you for clicking in once again. We would like to apologize for not uploading last week. We're committed to uploading on a weekly basis and taking you through our journey to $100,000, which by the way, we've finally set a time frame. By 2025, we would love to get to $100,000. And already we've crossed $10,000. So that is worth celebrating for now. But yes, today we have a couple of things to go through. First, we'll take you through the performance of the portfolio and the purchases we've made this past 2 weeks. Then we'll go on a quick analysis on crypto and the markets. Today, we'll focus a little bit more on bonds and our new position in TMF. In the last video, we promised to step into TMF and we've established a very small position. We'll give you an update on that and a quick yield analysis. Then finally, we'll go through our plans over this next week. First, let's jump into the performance of our portfolio. This past week, we're up slightly. This past month, we're down slightly. This past 3 months, we're down big. We're down about $600. And this year to date, we are down about $300. And this past week, really, or this past month, has been characterized by two really opposing movements. Our crypto portfolio, which is about half of our assets, our portfolio, and our stock market portfolio is the other half. Right now, we have a little bit of cash, $1,000. But crypto has been performing well this past month, and stock has diverged and been performing horribly, to say the least. So net, we are actually net unchanged. Look, this is what I'm talking about. This past week, we're up about $160 in crypto. This past month, we're up about $300 in crypto. Then, of course, past 3 months, we're still down in crypto. And year to date, we are up slightly. Bitcoin is above $27,000 right now. We haven't increased, we haven't added to our crypto portfolio, unfortunately, because this rally, I don't want to say caught us unawares, because as you'll see soon in our crypto analysis, we still believe that there is a downside to this rally and there's a downturn in the immediate future. But we've enjoyed this rally. We love it. Compound Bitcoin Cash. Now we're thinking that we want to get Compound and Bitcoin Cash to about $2,000 each. So we have a ways to go, but we will wait for that downturn to come. Like you can see, we're currently up about 8% in Compound and up about 5% in Bitcoin Cash. So we will wait for that downturn, then we'll go into this a little bit more. We're still committed to having about 2 Ethereum, and we're committed to getting Bitcoin to about $2,000. So that's it for the crypto portfolio. Like I said, we'll jump into the analysis in a second. But what's been going on with the stock markets? Just with our position alone, the clean energy ETF has just been a mess. It's down about 20%, and we're down about $200 in this just that we got in this mid-year. Year to date, this ETF is down about 31%. It's been a nasty year for clean energy. And this fund has a lot of great companies. First Solar, Enphase Energy, Solar Edge. They're great. They've been growing rapidly this past few years. But with interest rates at around 5%, it's been a horrible year, and demand has been really affected by the interest rates. And Enphase each issued a horrible outlook for third quarter. So we'll see how they perform. But in the near term, this ETF will continue to perform poorly. But it might provide an opportunity to buy, and we do plan on buying a little bit more of this ETF outside of the recurring investing. As we said, we actually purchased CMF. We only started a small position here. We put in about $200. As you can see, we're down already by 10%. Year to date, this ETF is down about 46%. It's just been an ugly performance for ETF. Just straight down since 2020. Straight down. If you shorted this ETF, you would have done very well. But we are not into that. Are we going to catch the bottom? We don't know. But let's jump into the bond analysis. What has been going on? I want to start here. Let's start with the 10-year. The 10-year, let's look at year to date. The 10-year hits 4.88 intraday yesterday. And that is the highest it's been, I believe, since 1990. That's the highest it's been, at least in the past 20 years, as you can see here. In the past 20, 23 years or so. It was bad and it affected the stock market. And in fact, I believe really yield movement, yield volatility has been the sole reason for the stock market's underperformance this past month and a half at this point. But what's going on? What is going on? In the bond markets, in the economy, right? Economists actually tend to watch what you call the 2-year, 10-year spread or the inversion of the yield curve. When this is negative, it means that the short-term yield, in this case, the 2-year yield, is above the long-term yield, which normally shouldn't happen. Okay, so when this is negative, it is bad. And this was the highest spread, negative spread, we've had since, I believe, 1981. 1981. So a lot of things are going on in the bond market. Like I showed you in the 10-year yield rose rapidly in this past week. In the past month, it's up quite a lot. Okay, now what has happened in the past 5 days or so? This spread has really reduced. It's reduced because what did you have? You had your 10-year, your 30-year rising rapidly, and the short-term yield, the 2-year yield, didn't rise as much. So economists believe that once the yield curve uninverts, okay, so once it steepens back up, it goes positive, that's actually when you have the break. Remember, if you're familiar with yield curve inversion, once the yield curve inverts, it normally signals recession. In fact, since 1956, okay, yield curve inversion has signaled every single recession. And as you know, the yield curve inverted last year around July time. So normally it takes about anywhere from 6 to 24 months, on average 15 months, which means October of this year is when recession should really start, if you do believe in those things. But back to what actually matters to us. Back to what matters to us. We believe that this re-steepening, okay, again, going from minus -1 to -31, -1%, sorry, to -0.31% is good for us in the short to medium term. Let me take you back a little bit. Take a look just from here, from 2006, end of 2006 to 2010. Okay, you had a re-steepening. So it went from -0.12% all the way to a positive 2.69%. Do you see this? All right, now let's go to the 10-year yield. What happened around that same time? Going back to 2006, okay, let's start from here. From 4.7 to 2010, what do we have? To 3.8. You had a reduction in yields. And of course, this is good for TMF. Okay, I hope I haven't lost you there. This is good for TMF. Basically, what I'm saying is, yes, this might not be good for the economy in terms of by the time you have this re-steepening happen and the yield curve uninverts, that probably should mark the start of a recession. And once the recession starts, you have investors jumping into bonds and reducing those yields. And once those yields come down, this baby should jump. That's the play. But in the near term, like near term, in the next week or two, I really do see the 10-year hitting 5%. It could. And of course, that means the TMF will suffer. So we might still have some time, but we do want to increase our position in TMF to $1,000. And that's the max we're going to go. That is the max we're going to go with TMF. We can't do more than that. It's quite risky, and I don't encourage buying it or making it a large size of your portfolio. So that's where we are. Again, having crossed $10,000 at some point, we'll start thinking of a hedge. $10,000 is still relatively a small portfolio, so a hedge might not really make sense. And if anything, maybe about $500 worth of hedge. And that's probably in the form of a put option. Now, let's quickly jump into the analysis of crypto and the markets. Here we have a Bitcoin chart and NASDAQ. You will see here that in the past month, this is month, and on the hourly charts, Bitcoin is up about 7%, and the NASDAQ is down about 5%. So Bitcoin outperformed the markets. As you can tell from our portfolio, like I said, right, crypto is the reason why we really net unchanged in the past month. But why is crypto up, and what did we talk about here? We had said that this death cross is a sign for bad things to come. So why isn't that happening? Or were we wrong in our call? I don't think we were wrong in our call. And I'll take you back. I'll take you back a little bit. But first of all, this is what normally happens after you have a death cross. Once you have a death cross, which is the 50-day moving average crossing the 200-day moving average, which happened around September 11th. What usually happens is this, because people expect the price to just drop down, and we had come up with a price target of about $20,000 to $22,000, but instead, what did they do? From $25,000, it went all the way up to $28,000. What usually happens after a death cross is the price tends to touch this resistance, the 200-day moving average. If you look at this bar right here, you can see that it perfectly got stopped at the resistant line, which is the 200 moving day average in this case. Okay, so it touched the resistance and we expect it to fall. We do expect it to fall. And that is what we're saying. That is what we're saying here. I can't figure out this line. It's not a good line, but yeah. So going back in history, we'll see the same thing recurring. Let me pull this down a little bit. All right. Where is the dead cross? Let's zoom this out a bit. All right. First one here in what, 2022? Okay. Yes, this was after the high has been reached. You had your death cross. Okay, Bitcoin was already falling. You had your death cross signaling really start of a bear cycle. Then what do you have? Bitcoin price goes sideways, but then it goes up. So from about $35, Bitcoin went all the way up to about $48,000. It hits the resistance line, the 200-day moving average. Then it fell again before it produced this low. Do you notice that pattern? All right, let's continue to go back to the previous cycle of 2017. Okay, you hit your all-time high for that cycle. You put in a bear market, start of a bear market with this death cross. Okay, let's zoom in a little bit. You have your death cross. What happens? Bitcoin goes up from 6,000. Bitcoin hits almost 10,000. It hits this resistant line again on the 200-day moving average. Then it goes down before it put in its low for that particular cycle. Okay, so we have this over and over and over again. This is a fake out. Again, here again, you see the same thing. A death cross. What happens? Bitcoin rallies. It puts in a death cross, then it rallies, but then it dumps. Although this coincides with COVID, so we might forget that. But the point still stands. The point still stands that here, what we might be witnessing is a fake out. It puts in a death cross, it rallies. But as you can see, it perfectly hits this resistant line at the 200-day moving average right here, stopped out by it. So what do we expect to happen? We expect this to fall. Our target still remains 20,000 to 22,000. So that's where we will be buying. Okay. Why has Bitcoin outperformed the markets in the past month? Well, simply because we believe it's just a reprieve. In the past 3 months, Bitcoin has underperformed the markets. Okay, you can say this is Bitcoin and this is the markets. In the past 6 months, the same is true. Bitcoin has underperformed the markets. So all it was doing was a little bit of a rally, reprieve. Okay, that's all it's been doing. Okay, I can't even get a line to work. That is fine. Yes, of course, year to date, Bitcoin has outperformed the markets, but we're looking at the past few months trends. Okay, we do believe still that this will fall to about 20,000, and that's where we intend on purchasing our cryptocurrencies. We're committed to getting our crypto portfolio up to $10,000 by the end of this year, and we believe we'll get that chance. So we're in no rush to purchase crypto at these prices now, because the trend still says that Bitcoin should fall. The technical analysis does, and we believe in that. So we're in no rush. As you see, we've made new purchases of crypto this past 2 weeks, and we'll continue to wait. We're patient enough. We'll wait that out. In the markets, though, the market that has been underperforming, this might be time to buy one or two things. Got to be careful because the economy is looking like it's standing at a precarious point right now. There's a lot that could go on, so we'll be very patient. But yes, that's our quick analysis on bonds, on crypto, and on the markets. We'll continue to keep you guys updated. We thank you guys for joining us and hope to see you soon in the next one. Thank you. Bye.